Imagine a world where banks do not have a say or control on our money, financial products and financial services. A financial system that utilizes blockchain technology that is secure and verified, empowered by computer code so powerful that there is no need for a middleman handling our transactions and boring paperwork. Have the ability to exchange currency, borrow money and lend money from the other side of the world at the speed of light. Decentralized finance, or DeFi for short, could make this all possible. Like and subscribe to help support the channel. Decentralized finance ultimate goal is to replace traditional financial service providers. It is more than just a store of value such as Bitcoin and Ethereum. Decentralized finance can do anything a bank can do on the blockchain without the structure, restriction and costs of a traditional centralized banking system. Decentralized finance is a peer-to-peer system of storing and transferring assets. Decentralized finance is the Swiss Army knife for financial services that facilitate borrowing, lending money for interest, buying insurance, trading derivatives, gambling, crowdfunding and trading assets. What are the components that make decentralized finance possible? For stablecoins, the cryptocurrency value is pegged to a reserve asset such as the US dollar or gold. Some examples of stablecoins are DAI, Binance USD, USD Coin and Tether. Why is this useful? Generally speaking, cryptocurrency value can go up and down within a short time frame. Stablecoins help solve this problem. The blockchain acts as a public ledger that exists across a network. There is nothing to hide as a record of each transaction is made public and kept in more than one place. Transactions are recorded in blocks and verified by other users. Blocks are built one after another and chained together. Information in previous blocks that have been linked cannot be changed. Smart contracts are simply a program made up of computer code that acts as the intermediary that makes sure each party fulfills their obligation before actioning the agreement. You can think of it as code that can action a digital agreement between two individuals. The smart contract runs on the blockchain and cannot be altered once the agreement from both parties have been fulfilled. The blockchain has the ability to process smart contracts and there is no need for another person to be involved. What are the benefits of DeFi? The speed for actioning transactions is fast and completed in near real time. Settling transactions with a bank can take days to complete. Banks have go through rules, regulation and a lot of paperwork. DeFi is way faster than conventional centralized finance that the banks use. You do not need permission. No one checking your identity and checking the amount you are sending meets the Money Laundering Act. No need to wait for the bank to clear your transaction. Cannot be censored or shut down by government authority. Have the ability to store your cryptocurrency in a digital wallet and have full control of your funds. Access to DeFi anywhere in the world with internet. You won't be limited by banking hours or your location. Is transparent. All activities occurred will be recorded on the blockchain. In addition, manipulating records on the blockchain is impossible. DeFi is a more open system that can cater to more people. According to the 2017 Global Findex report, worldwide, there are about 1.7 billion adults that are unbanked, meaning they are excluded from the financial system. The ability for programmers to develop apps and smart contracts using built-in programming language. Decentralized finance removes the need for third parties like banks to conduct financial transactions through using emerging technology. Fees from DeFi are just a fraction of what you would be charged from a bank or another third party. What are the problems with DeFi? Hackers could find breaches in the code and exploit it. Software is only as good as the code. Smart contracts could have an error and make the mistakes/defect over and over again. There have been a few people pretending to develop projects and instead running away with investors' money. In 2021 it is estimated that 2.2 billion was outright stolen from DeFi protocols. Currently there is no best way to regulate DeFi. Who would be responsible for investigating financial crime? Who would enforce this regulation and how would it be enforced? In most cases you can borrow currency if you are able to provide collateral with other crypto assets. This issue here is that crypto can be volatile. At a minimum, you would need to provide at least 150% of the value of the loan as collateral. Some people use stablecoins as they are pegged to the dollar like USD and in theory be less volatile. Special tip on DeFi. Avoid new tokens that haven't gone through a code audit. Code audit is a process where a third party looks at the code of the smart contracts and protocols. The process will do a comprehensive analysis, detect malicious activity and discover errors within the code. Comment below for topics you would like to explore in future videos. Do you think that decentralized finance is the future? Thank you for watching. Please like and subscribe to help support the channel.